Hi, everybody. I'm very pleased to introduce this panel, Women in Finance, which is the first time to be covered in a Chile Day. This is a topic that has become very relevant for institutional investors, for organizations, and for governments. And in Chile, I have to say that in the last 5 years, there has been gradually progressing, but there's still a lot to do. Today, we have great panelists that will be sharing interesting data and their views. So now I leave you with Ladislao Errázuri. He is CEO at Larraín Vial Asset Management, who will be moderating the panel and introducing you our great panelists. Thank you. Ladislao.
Thank you, Isabel. Can you hear me? Yes. Thank you very much. Well, I am very pleased and happy to introduce these three brilliant panelists. On my right, first, I have Kevin Cowan, Commissioner Financial of the CMF. Kevin holds a PhD from MIT, and previously he was Director for Chile at the Inter-American Development Bank and Director of Financial Policy at the Central Bank. Also on my right, I have Camila Guzman, who is Portfolio Manager and Head of Research at Larraín Vial Asset Management, so she runs a fund. And finally, Rosario Celedón, here in my left, Director of Financial Policy of Central Bank. She holds a law degree from Universidad de Chile and an LLM from University of California, Berkeley. Previously, Rosario was Commissioner of the Financial Market Commission and advisor of the Ministry of Finance in the design of the FinTech law. She has an extended experience in public policies, capital markets and regulation, and digital finance. So as you see, we have a very good set of panelists, and I let you with Kevin. So thank you, Kevin.
Thanks. Can you hear me? Well, thanks. So first of all, good morning to everybody, and thank you very much to Invest for the invitation to present today. So we can get into the panel, I just want to set the tone with some data about what is happening in Chile in terms of access by women to financial products and also the involvement of women at board and senior levels in regulated companies. So to start with the glass half full, existing gaps in financial markets in Chile have been closing. Slowly, but they have been closing. On the other hand, financial behavior in terms of payments, in terms of savings, and in terms of certain decisions being taken at the board level are better than that of man. So to go into a bit more detail, what exactly is happening in Chile? So first of all, let's look at access data. What is happening with women's access to financial services? The last number we have, which is 2021, showed that access to debt in Chile and different products, be it mortgage, be it consumer loans, increased the gap between women and men, which was 57% in 2002, in the sense that half of the number of households led by women had access vis-a-vis men. That is closed, and we're now actually at 107%. So really, for that perspective, in terms of access to credit products, the gap has been closing. In terms of payments, and in particular holding of credit checking and sight accounts, we also see a closure of the access gaps, mostly in terms of cuentas vista, as we call them in Chile, basically payment account more than checking accounts, but a significant closure. This is on the hand of expansion from Cuenta Root in Banco Estado, and also expansion on a series of non-bank payment providers. And in terms of savings, the trend is that the gap is also closing. And in particular, we see rising numbers of saving product used by women vis-a-vis men, in particular in long-term savings. However, Or let me put at the, one other positive point. Data we've been putting together for several years at the CMF also show that, in particular in credit products in regulated financial entities, all else constant, women exhibit much better payment patterns than men, and arrears are significantly lower. I think that's another key point. However, and this is the glass half empty, despite this better payment behavior, all else equal, we still see evidence of higher interest rates being charged on loans accessed by women, and also lower access in terms of the probability of a loan being approved by different credit actors. This holding all conditions constant. Where do we get this number from? Well, basically from a report that we've been putting together at the CMF for the last 20 years, which aims increasingly in scope to address data on access and conditions by gender to financial products. We expect this report to provide data for public policy discussion, and also, as in today's panel, to be discussion serve basis as a call for action. That's in terms of access to financial products. Thinking now in terms of the role of women in high management positions, and in particular in the boards, we do see that over the last years, women are having a higher participation in corporate boards in Chile. However, this trend is at a very slow pace. Taking the latest available data, and I'm talking of June 2022, female participation in the largest listed companies was 19.4%. This is a significant increase, for example, from 2019, but still very low compared to the rest of the region and compared to OECD countries. If we double click by industry, we see that in the banking sector, 8% of board members are female. That is low. It's low compared to the rest of the financial sector, it's low compared to the rest of the economy. On the other hand, in the insurance sector, we see that board participation is significantly higher and actually above the global average. So there's quite a lot of heterogeneity within the financial sector. I've started putting this presentation in these two segments: access to financial products and board diversity and female participation in the board. But actually, there are two segments of the market that mutually reinforce each other. And one of the key issues that we see is that having more diverse boards, having a larger share of women in the boards, is actually a stepping stone for creating a more inclusive financial sector. It's actually very hard, no matter how much different board members try, to be able to bring a diverse view to the board if the board is dominated by a certain gender or a certain segment of the population. So we think that these two changes, access and management, will actually move lockstep in terms of generating a less fragmented financial sector in Chile. And this is one of the things that I want to touch on this. Interestingly, and this is not only in terms of gender access improving with higher female board participation, there's a very interesting paper that came out in the BIS a couple of months ago, actually, that in line with this view, which I'll discuss later, that female board members tend to have a longer horizon in their decisions. You actually see that financial sector firms that have a larger female participation in their boards are actually more active in green financing products and have a significantly higher bias of green lending in their portfolios. So let me just dig down now as to women on boards, which has been a topic of much debate recently in Chile, and in fact, as I stand also in the European Union very recently. Currently, the Chilean government has put forward to Congress a law which establishes minimum participation of women in boards of publicly listed companies, and a transition period in which There will be a comply and explain phase-in as we move towards the 40% minimum. What do we know of the potential consequences of something like this? And what do we know in general of the potential benefits of diversity and greater women participation in boards? The 4 points I want to mention are points in which there at this stage is fairly robust empirical evidence of the significant changes that this board participation can have. So these are sort of, I'm not citing the papers, but there is research at this stage that suggests that this is not only wishful thinking, but is actually something that translates in practice. First, one benefit of having greater women participation in boards is the design of more suitable financial products for the broad population. We have a financial development mandate at the CMF, and the way we've looked at this financial mandate is of providing a larger share of suitable financial products. So in that sense, we view very favorably that there would be a larger woman share on the boards. Second, and I think this is also something that has come up in a lot of discussion, is diversity reduces the risk of groupthink. And in that sense, improves governance, a long-term perspective, and improves risk management. And in general terms, more diverse boards have a better management of risk, are more active in specific committees, and have this longer-term view. A third benefit is that you also see empirically that greater female representation reduces the frequency of market misconduct. As I said before, there is evidence that there is more active participation in management, in monitoring committees, increased monitoring, and in that sense, an alignment of a long-term view and a more conscious risk management policies. Where there is more discussion, and in this sense the jury there's less empirical evidence, is regarding risk aversion. Do we have relevant gender differences in terms of risk-taking? I think there's some hypothesis being floated after the global financial crisis that this is the case, but on the other hand, there's selection bias as to who decides to participate. So I think we leave this there as it's an interesting topic with something which at this stage we don't have enough data. And finally, and this is something I just want to mention again, what is clear is that women on the board tend to take a longer-term perspective, tend to have a broader view of stakeholders, and really in line with what we've been discussing today in Chile, and in line with broad trends, having this longer-term perspective is increasingly relevant for stable and sustainable growth strategies moving forward. So in wrapping up, I think there is fairly broad agreement at this stage that a more diverse board, more diverse senior management is key for long-term sustainable growth and better risk management. I think that's something at this stage is something that is fairly consensual. How to move forward? Well, obviously one key area of work is by disclosing information and raising awareness that becomes a move to action. And in that sense, the CMF has been publishing for several years, from 2015, data on board participation through norm 386, and we enhance this moving forward with our ESG norm. So I think that is a key component of this discussion. And in fact, the fact that we can put these numbers up here to show how we are relative to our peers in the region and to other OECD countries is part of that. Moving forward, obviously some countries have gone further in terms of a comply or explain target, or in fact a compulsory quota. I'm not going to get into the discussion of the quota, but I think it's important to understand that even if you move towards a quota, simply having a target is not enough to obtain the multiple benefits that I mentioned in the previous slide. There is evidence that if the quota is not accompanied by a general change in attitudes, cultural barriers, resistance to inertia, what you do find, and this is an interesting study by IOSCO, is that you really have a comply-to-comply scenario in which you are loading your board with a greater share of women, not because you have a deep conviction that actually this is going to generate long-term growth and better risk management, but simply because it means that you don't have to turn around and explain something to the financial regulator. So I think that's a risk. I think there's a risk of recycling, and this is something that IOSCO members have documented carefully, that you don't increase necessarily the amount of overall women in boards, you simply generate double, triple, and 4 times the number of board positions by people who were in boards before, and then you're actually starting to trade off what is this longer-term perspective with the fact that if you are in a large company, really the capacity to serve as a board member is significantly reduced if you're doing 5 or 6. So I think that's a third risk, and third risk is actually, again, relationships coming in and actually diluting what should be a key component of corporate governance, which is protecting minorities. So I think the point is here not that you don't want to do quotas, not that you don't want to do comply or explain, but the key point I want to raise is whatever the legal mechanism to generate this greater diversity, it needs to overturn cultural barriers and inertia. So whatever you do, we need to come to a broad conviction that this is actually something that makes sense from the stakeholders, from the financial inclusion perspective. So really in that, I'm going to close. My final remarks are along these 4 lines. So despite this glass half full view of greater financial inclusion and deepening, still there is work to do in the Chilean financial markets to close the gaps. And it's something that as a financial market regulator we are cognizant, and it's something that, at least in terms of disclosure information, we want to continue pushing as part of the agenda, because we see that this is part of our financial development mandate. Second, we will continue to provide data that allows supervised entities to make correct decisions, both by benchmarking their governance structures to other industries, but also by understanding how their products are faring against other institutions in terms of coverage, terms, and so on and so forth. And hopefully, as I said, there's a positive feedback between governance and diversity in terms of financial inclusion. Finally, the last 2 points. I mentioned this before, but I think it's key just to mention it again. If ever, in the last 30 years, it is important to have a longer-term perspective, which draws in multiple stakeholders to be able to design a sustainable strategy for firms, and in particular financial firms. It is now. And in that sense, there's a tremendous value to be able to move towards diversity, be it because of encouraged by legal push, or be it because of a firm conviction that this is the thing that makes most sense from a long-term perspective. And finally, if we do both of these things, we think we will generally be moving towards a better financial system, a more inclusive financial sector, and in that sense, fulfilling the role that the financial sector has in terms of development and social welfare. So I know I took a bit too long, but these are the key points. Thanks.
Thank you, Kevin. Thank you very much, Kevin. So Rosario, would you join us?
Thank you. It's going to be hard after that presentation, but I'll do my best. So first, I would like to thank Invest and the Minister of Finance for inviting us. The sole fact that we're discussing about this in the agenda, I think, shows that our financial system is conscious of the relevance of this topic, its impact for the long term and sustainability of our financial system. So what I will talk about is going to be very complementary to what Kevin said. I'm going to try to give you the view of the Central Bank of Chile and how we're addressing the gender perspective in several dimensions. What are we doing in terms of explaining about the role of women in society, financial inclusion, and what we have done internally in the bank. And let me start by recalling a paper of the IMF in 2018, when they were saying that women, we are underrepresented at all levels in the financial system, as users of financial services, in the leadership of management of financial institutions, and also in the financial regulators. And you can ask, why is the IMF talking about this? And it's not only because of the role that greater inclusion and participation of women can play in addressing gender equality, but the IMF is talking about the impact on financial stability and the effectiveness of monetary policy and fiscal policy, the impacts on depth of the financial system, financial inclusion, and even the formalization of economy. So although we have done some progress in Chile, we have still a long way to go, right? So let me start by sharing with you some basic statistics. And this is one from the Global Gender Gap Index that basically shows that Chile has improved in recent years in closing gender gaps, but we still have work to do. So Chile ranked 47 among 146 countries in this Global Gender Gap Index. And if you see the numbers from the last year, you see that we're recovering from the fall that caused by the pandemic, but we're still low in very relevant dimensions. One of these is the economic participation and opportunities. And when we talk about this, we're talking about wage inequality, income parity, and also positions in senior managerial and legislative roles. In recent years, Chile has done some progress in terms of political participation, but still when we talk about economic participation of women and the impact on autonomy for women, we still have a long way to go. I'm not sure if you can see the figure from the World Economic Forum, but if we keep in this pace, we would be closing gender gaps by 2089, and that's probably after the lifespan of most of us here in the room. So it's definitely a role for, I would say, everybody in this room, not only for financial authorities, for public policy, but the financial sector has a key role to play in this, so hopefully we'll hear a little bit about that in this panel. So what does the central bank have to do with the role of women in finance? And I would say that in recent years, the central bank has been putting special emphasis on addressing gender issues in several dimensions related to our mandate. And one of these areas is our analytical capabilities. So the central bank has been including the gender perspective analysis in its main economic and financial reports. The focus here is to help to disseminate and inform about the role of women in society, also providing empirical background to the design of public policies that can support inclusion. And if you see the work published by the central bank in last years, you will see several research regarding the impact of participation of women in the labor market and its impact in macroeconomics. Here's a couple of examples. One regarding the increasing participation of women in line with greater access to education and the growing relevance of women in society, and how that can have an impact. We're still below OECD standards, but you see an increase in participation. And in particular, you see an increase in participation in the services area. This is in line with the greater development of the country, but also with the growing importance of the services in the Chilean economy. So you see more women participating in services and also in financial services. And these studies also show, for example, the relevance of wage gaps. And you see women's average wage profiles always below men. Then afterwards, during COVID, the central bank also focused on studying a little bit more about the drop of women participation during COVID. And we identified two main factors. One is the more responsibilities that women play in duties of care in their family groups that also affected their participation during COVID. And also that one of the sectors that was most impacted was services, and since women have a higher participation in that sector, that also affected. And why is the central bank focusing on this? Trying to understand if this phenomena will be persistent, will those women come back to the labor force or not? And the most recent work related even to trying to measure the contribution to GDP of household work. So this is one kind of work that the central bank has been doing and will continue to do. The second one is more related to what Kevin was explaining. It's about the role of financial policy to improve financial inclusion. And this is perhaps one of the gaps or the gender gaps that has greatest impacts on women. It has a daily impact in how women can access financial services, when applying to credits, when making payments, when trying to hire insurance, for example. So, and this is also a key factor to achieve autonomy of women. This has impact on our capabilities to be productive, to realize our personal projects or family development, to improve resilience of more than 40% of households that are led by women in Chile. So certainly have made progress. The growing participation of women in labor market allows women to generate their own income sources, and that has been translating into improvements in financial inclusion. And I guess Kevin already referred to these areas, right? So how gaps have been closing in access to the most basic financial products, access to bank accounts, access to credit, access to saving products, for example. But we believe we still need to do further work in studying this, in measuring the evolution, and also into publishing gender segregated data that allow us to see the evolution in different kind of financial products, not only credit, not only savings, but also payments, or what's happening with the introduction of new business models by fintechs, for example. So measuring is key. So my final point here is that we need to really look forward for the potential of financial innovation, technology, and new business models that can put focus and provide financial services that are more tailored for the needs of women. And I guess we can discuss a little bit about that in the panel. So in this focus on providing data to provide support for the design of public policies, I would like to briefly share with you the results of the most recent household survey performed by the central bank, which was applied during the pandemic. So it helps us to capture what happened inside households during the pandemic. And the interesting thing here is that we see a different pattern between households that are led by women rather than those led by men. 42% of households are led by women, and we see different patterns, and that should help us, all of us, the ones involved in public policies, but also the actors in the market, to see this in detail and see if we can get some lessons from it. One of the things that we see is that female-headed households during the pandemic increased their incomes more than households led by men. So we see that there was an increase of up to 30% in the incomes of households during measuring the last household survey. So this is a survey that's been done since 2014. So we follow the same households over the time, and we see an increase in incomes, and we see a particularly important increase in households led by female due to these transitory direct transfers and governmentalized that we were discussing in the morning. But what we see in the graph on the right is that those households led by women hold less amount of debt. So one of the behaviors that we were able to see in the families during the pandemic is that some part of this additional income, some part of this additional liquidity was used by families to reduce their debt. And that talks about the very cautious behavior. So there's lessons to learn from that. The second one is about the kind of debt that these households have, and this is different in the pattern of households led by women. We see that their total debt to income, so their total debt stock over their analyzed income is lower in the case of households led by women. And that is to some point because they have less exposure to mortgage debt. But when you go and see their debt service, the monthly financial expenses over their monthly income, you see that it's similar to men, but those households led by women tend to have more short-term debt, which is usually more costly, as Kevin said. They have to pay higher interest rates, and that is more related with consumption, their investment. And finally, we also see that, having said that, so families with higher incomes, with less debt, they're using their extra incomes to pay debt. Women still report the perception that they have a higher over-indebtedness. And that again talks about this precautionary effect. So this is a few figures about this survey. The survey is published in the website of the central bank. You can all go and access and see the information in detail. It provides further information on that. For example, the financial assets kept by these families, what kind of investments do they have, if they invest in bonds, in stocks, if they invest in mutual funds. So the idea here is to provide information that is accessible for everyone and to get lessons from that. In the same line, the bank has been making an effort to disseminate information, and so we launched a new section in our website, which is dedicated to statistics on women. This is basically a compilation of gender statistics, but with historical data. This is statistics that are elaborated by several institutions in the government, including CMF, for example, and it's very dynamic, and you can really see the evolution over time. We have demographic data, we have data on new companies or entrepreneurship started by women, we have data on financial products. So the idea here, again, is to help the design of public policies. And one final word, what are we doing in the central bank? And that may serve a little bit as example for financial institutions as well. I would be very interested in knowing what the private sector is doing in this area. But I would say that it was key in the central bank to include diversity, inclusion, and non-discrimination as part of the core values of the central bank. This is really in the core values of the bank. And the reason why the central bank decided this is basically to be able to react to this changing environment. So promoting diversity is part of the central bank culture, and it contributes strategically to address these technical and adaptive challenges that we're facing. So the list of measures that the central bank is doing to promote greater female participation at different levels is very wide. It includes programs related to recruitment, selection, culture, and promotion. There are several lines of action, and I would say finally that we're making progress. There's some data here on the right-hand side in terms of participation in terms of the total staff of the bank. We're still 33%. In the senior management, we reached parity last year. We have our first women as governor of the central bank. 2 out of 5 of the board members in the central bank are women, same case in CMF. So we're definitely making progress, but we have been introducing different measures to go a little bit further. It's hard to reach sometimes to women in the economic fields to be able to attract them to work at the central bank. So we have been implementing mentoring, internships, and a few other measures. We have made progress. We'll still have a long way to go, but it's definitely a priority of the central bank. So that's it.
Thank you very much. We are a very flexible panel, so in the case of Camila, she's going to complement your deep analysis of both of you, Rosario and Kevin, with the view of a practitioner. She, as I said, she runs a fund, so she can bring to the audience her experience. And do you have anything, especially to complement the Kevin and Rosario's view, or we go through the question? And I encourage you, the audience, to bring questions. There is a microphone on the room, so we can raise your questions. So, Camila?
Thank you. Actually, yes, I think I do. Kevin said something that I thought is especially important regarding the stepping stones that women generate being on boards, because there's like a snowball effect. There's like a momentum that comes from that, because you see a woman in a board of directors, and then there's this young woman that says, I want to eventually be like her because it's feasible, because she's there. Then she tries to go as an analyst, and then she sees another woman in a middle management, or me as a manager of a fund, or maybe as a CEO, CIO, or whatever position it's there. So it generates a very important momentum that, and I'm perceiving it. I manage the equity team at my firm, and it's amazing in the past few years, the amount of demand that we're seeing from people that are just coming out of college, that we're seeing this demand from the investors' part, that they want to be investors, they want to be analysts, they want to eventually become a board. They see this as something that's reachable, it's tangible. So I think this not only generates effect of women in 20 years from now that they're coming out of college, it's generating an effect now. And that makes the multiplier effect you mentioned before so relevant. So that's from the investor side part that I think it's very interesting. We're already seeing that, and I've seen that in my 12 years of experience. And
may I interrupt you a little bit? Because you mentioned the case of the analyst, but in the case of the top level of organization, I think that we have to be patient. You show us some very interesting figures, but we are still on the way to reach the level of developed countries. And I think that we have to be patient because investors price low turnover. So I think that companies cannot change all the C-levels of the board of director quickly or as fast as they want. So it's good that you mentioned that analysts are approaching the...
We're getting there. It definitely is. It's something that probably will take time, and I think sometimes it's piano va lontano. Maybe sometimes it's actually a good thing that takes a little bit of time, because you're seeing such good quality women that are getting to very high positions, and I think that's also, it's not only a quantity thing, it's also a quality, and I think it's also important to be transparent about that. And that's from the investor side. And then as companies we invest in, actually, Rosario said something very interesting, and I wanted to point that out. We're pushing the same boundaries, and we're trying to get to the same place. Further, I manage one of the largest funds dedicated to Latam, and we, not only our investors in our fund, not only are pushing us to get the better returns, but they're also asking for us for extra financial objectives. And when we do that, we look at the companies we invest in. And I remember a company we invest in, we have a very important position. It's called Gentera. It's a company, it's a bank in Mexico that's actually started, Banco Compartamos, as a company it's one of their main goals. It's to generate credit to women that they're really underbanked and underpenetrated, as you mentioned it yourself. And this is quite interesting because you mentioned it, they pay higher rates, they have lower NPLs, so they started generating these group credit of 20 women, 10, 20 women. They're loaning $400, and they have a very low turnover, very low NPL, and they have a very good ROE. It's not just because they want to be a better world, they want to be profitable, and they saw this gap, and they saw this opportunity, and these types of companies make a lot of sense for us as investors as well. So we are pushing boundaries, not only ourselves as investors, but also companies that are targeting these gender gaps that don't make sense from a financial point of view, and there's huge opportunities there as well.
Thank you. For the three of you, and I repeat the invitation to bring us the questions. Do you see that women can help to go further in greener economy, in greener finance, or in a finance that is Kevin?
Yeah, so actually I can go back to one of the points I made. Simply from an empirical perspective, there is data coming out from the BIS that shows that if you look at the banking sector, which is obviously not the only institutional investor, but one of the largest institutional investor, there is a higher share of green lending from banks in which women have a higher share in board and management positions. And I think that sort of suggests that, as I mentioned, because then you have to say, well, what is the causal explanation of this? Why are you generating this? And I think it fits in nicely with this view in which there is also evidence coming out that suggests that the evaluation horizon and the breadth of stakeholders view that women bring to higher management positions is consistent with this greater concern of greening the financial sector, long-term sustainability. So I think there's very good conceptual reasons, and then it's also playing out in the data. And I'm not in any case arguing that this is something that is not happening In other institutional investors and others, it's simply that this is sort of areas in which data is coming forward slowly, and we need to sort of build up the analytics. So I think the answer is yes. We're seeing that, and I'd expect that this is something that plays out in pension funds, insurance companies from the same perspective.
Rosario, would you like to add something?
No, I would just like to add that it's interesting to see how, I don't know, financial institutions like the ones involved in investment are taking these issues seriously. Maybe Kevin can talk a little bit about that, but from the point of view of financial authorities, we can help up to a certain point, and I think we're putting the efforts in providing information, in providing data, but it's going to be very interesting to see how the same financial institutions start to disclose to the market what they're doing in terms of efforts. Here to learn from best practices of other actors in the market is going to be very helpful, and I think disclosure can play a relevant role in this area.
Thank you. Camila, any thoughts regarding green economy, green finance?
Yeah, actually, I think maybe from the investor side, ESG has contributed so much for this, and I don't know why I'm not a psychologist or anything like that, but women tend to be more, and this is empirical data as well, tend to be more prone and more interested in ESG matters. So there's like two trends that are going hand in hand, and they're correlated. I don't know what's the causality there, but we are all also like trying in the same thing of trying to get diversity. We're trying to get more, like at the same expected return, you tend to try to look for these types of technologies or these types of investments, and as well as diversity. So they're pretty much going hand in hand, and women being more prone to it, it helps as well. It's like another snowball effect.
And as Kevin mentioned in one of your research, less risk averse. So definitely is an angle that is really valuable for investors.
Yeah, and I think just sort of thinking about what Rosario mentioned, it's one question we often get around these discussions is what is the involvement of a financial regulator in these issues broadly? I think obviously we're very much aware that we're one piece of a public sector and that different pieces come together for an overall objective. So just to sort of take a step back there, I mean, I'd agree fully with Rosario that there is a public good role here of disclosing information, both regulatory information in terms of credit access, what the central bank is doing, what the SBIF and now CMF has been doing in terms of financial. The ESG norm, which we published last year, I think also goes from a perspective of disclosing information that is increasingly relevant for investors and stakeholders. So that's a second key role. And I think also from the third role is our concern of overall prudential management. And prudential management is nothing but managing a financial company from a prudent perspective. And in that sense, obviously, you can go very far in terms of raising capital standards, moving to Basel, moving to SBR and insurance companies. But ultimately, the first line of defense is a good decision process, which comes from the top, adequate management structures. And so there, from our protection perspective, the fact that we are seeing clear evidence that there is a more prudent management approach in different institutions which have a more diverse board, in particular, more female participation, very much aligns with the perspective that we have sort of in the third hat, which is a prudential regulator.
Thank you, Kevin. So you have had enough time to think questions. This is for you, so please.
Yeah, maybe we can invite the audience to have some comments or any question.
I will start. I am Andrés Merino, the chairman of Prodea AFP. In my perspective, and also based on my experience, it's also important to move forward in increasing participation, but not only in boards. Maybe it's a previous stage. That is also that when you're a CEO, also in the senior executive reporting to the CEO, need to have women, and also very, very important to pay the same salaries, because that is a first stage that they gain experience. You mentioned I forgot your name, but Camila, very clear that is a signal for the rest of the organization that you can go there. And then you have the experience when you go to a board, you can add a lot of value. Kevin mentioned a lot of things, but it's in my experience, a previous phase. And one thing that I like when you force a chart that in the finalists, candidates always need to be a woman. That is very important, also a signal for all the managers that if you're going to choose between 2 at least or 3, women need to be there in that terna. I don't know how to say that, but it's important that to force that.
Thank you.
Do you have
So can I just
information about the gaps in salaries?
let me just say that just a clarification around your comment. I think the fact that at least from available data perspective, the emphasis is on board composition and performance is simply relating to the available data. So so that's where we have hard data that shows this. And I think in no way should it be taken to say that it only matters at the senior level and it's sort of because of a trickle down. No, I think it matters at all levels of the organization. That being said, increasingly as we roll out this norm 461, we will have much more data moving through the organization in terms of participation at different levels and wage gaps in terms of similar characteristics, similar jobs. So I think that is data that will be forthcoming gradually and will allow also sort of to calibrate decisions along the lines that you mentioned, benchmark against other corporations, and allow, as Camila mentioned, stakeholders that are following PRI or following others to sort of take a decision not only on the highly visible level of the board, but actually to say, if you go inside the company, really, we are seeing that they are walking the walk, not only talking the talk in terms of participation throughout the institution.
Right. Ladislaw, I think we have another comment here.
Great.
Okay, thank you very much. My name's Gareth Taylor. I'm based at the embassy in Santiago, the British Embassy. I just wanted to mention the Women in Finance Charter, which is something we've done here in the UK, just to kind of provide a counterpoint to what we've been doing. It's been linked to, again, the same aims of getting better gender diversity on boards and also encouraging companies to set targets and to publish, if they're meeting those targets, maybe even to link executive pay to the targets. I guess I don't really have a strong opinion on you mentioned the quota that's been suggested, and this is a voluntary charter. It's more of companies to kind of opt in and to do it. I guess the plus side of having a voluntary charter is, I guess it's more about winning that economic argument that you mentioned, that if boards are performing better, people are thinking, well, if we have more women on the boards, the investments are going to have a better return on investment, we'll be better at ESG issues. I guess the counterpoint is that I think that the UK, the Treasury Initiative has been very successful over the first 5 years, but perhaps in the last couple of years, they've been saying that the numbers of women in boards had increased a lot, but had been starting to stagnate. So you perhaps don't have the enforcement. Whereas if you have a quota, it's more easy to kind of enforce the argument rather than kind of the voluntary approach. But yeah, I mean, I just wanted to mention the UK approach and see the difference between a mandatory target or a voluntary initiative. But thank you for a very interesting discussion.
Thank you. Guillem, Moderators, Isabel, if you can help me, please. Oh, well, great.
Good morning. Thank you for your time today, and your insight is very interesting. From anecdotal experience, I have noticed that women do not put themselves forward in technical positions sometimes, And I've also noticed that they lower their, in their CVs, they do not put their technical expertise in IT first, forward in their CV. And this is from the experience that I had building a team in Latin America, where the dominant is just mainly women, actually, that I engage with. Do you have evidence, hard data, or have you noticed a similar trend, whether it's in the central bank or in the financial sector in Chile or elsewhere?
Thank you.
Who starts?
Ladislau, do you mind if we get the other question and then we go to the panel?
I think it's
Okay.
a good idea, and then we can answer all.
Well, many thanks for your expositions. They were brilliant. My question is actually to the woman in the panel, and it's more based on your experience. What have you deemed that are perhaps the most effective initiatives, or perhaps not even the most effective, but initiatives that you have seen working well, so that we can shorten a little bit this period of time that the IMF is projecting that we will need for more women in senior leadership?
Thank you. So, Rosario, can you?
About your question on information that the central bank has in career development, basically, I could basically refer you to that study on participation of women in the labor market, and it has some interesting data in terms of wages. Basically, it shows that, and I guess every woman in this room will share this with me, but women's salary grows up to 10 to 14 years of a work experience. That's like the career development, and then begins to decline. So you have 10 to 14 years to develop your career, and then decline starts. There's a slight increase between 25 and 30 years. For men, it's different. Income growth phase extends to 20 to 24 years, and only begins to decline around 30 years. So, of course, there's nature issues. Women raise families, they take work breaks sometimes. So the career is kind of different, and that is shown by data. So at what time women decide to take upon harder responsibilities or expose themselves to more demanding positions, you have a shorter career. I'm not sure if your question was referring to IT or other fields. What we have seen is that in the case of economic fields, when you see at universities, there's a lot of talent there, women studying economics, and then you don't see them all the time in the positions afterwards. So things that the bank has been doing, and that may help with your question, that have been effective is trying to reach universities, to create internships, and afterwards to develop mentorship programs. So women that we have made those steps, we can show the women in the ladder how to expose themselves, to be able to make those decisions. And I think that kind of things have been working. I totally share your point of view about the spillovers effect or the propagation. When you see women assuming those kind of leaderships, that also, I think, shows a role. Exactly. But I think we definitely have to do more work in this. That's why I really believe that the fact that the regulator is asking companies to show the best practices, it's not a marketing issue. It really can show best practices that other companies can decide and take. This is suitable for my kind of corporation, it's not. So I think that's going to have a beneficial effect.
Actually, I'm going to address your question, and Rosario was like a little bit of spoiler alert for my question, but for my answer, but it's totally what she said. And I keep saying this, but I think women bring more women. I think the two things that help more is first to see a woman in a leadership position. It's not the same as a manager. I really say leadership because I think the way to speed up the gender gap, and as you asked it specifically, is to see someone not only that you can attain that position, but as well that could push you to attain that position. I like to see that as a way of, the way I see my team, I try always to push them. And I think this is very important because you want them to be better than you. If they're better than you, eventually it talks very good about you as a leader as well. And if you do that, I think it's not only that you see, oh, maybe someday if I'm lucky I can get there, you see the path you need to take to get there. And I think that definitely helps. And the second thing, it's colleges and schools. I'm taking a personal, this is my personal opinion, so I don't have a lot of data, but I'm going to the fairs on colleges. We're not sending someone. We're not taking the men or women that are in human resources. I'm going personally. I have gone to 3 fairs already, and I'm doing the same at school. Because you said it very well. Like I remember we were half and half in college, and then when I went to asset management, we were 1 in 10. So something's happening, you know? It's not that we're not getting to college and getting the same degrees. Something happens in the in-between. And I've been taking a personal agenda to try to make them see that we're there. It's just a matter of just seeing that we can work together, and it's a very constructive work a place to work between women and men and people from different backgrounds, and we invest in so many different companies that we can generate so much more value that if we all have different backgrounds, that rather if we're all part of the same mold. So I think us being present in those fairs and being present in colleges and try to grasp these people and internships and whatever, I think it's making it faster.
Of course.
I'm going to shamelessly use your 2 questions to speak to something which is completely unrelated but extremely relevant here. I'm not even going to try. So let me just say, I think we've been discussing a lot about access along the consumer and household perspective, and I think we've been talking a lot about inclusion of women in large corporations and reporting. And I think there's a piece here which, not by design, but by the way we've moved forward, we've been omitting. And I think the issue of SME financing, accessing financing in terms of particular SMEs led by women is a key issue. So we have a gap in general in Chile in terms of SME financing. We need to work towards that. Part of it is supply, and it's something that from a financial regulator we need to work on and see how that can be addressed. And the other is in terms of demand, and particularly financial education and financial literacy. And they're all, in general, Chile, we have a lot of work to do, but if you look at particular households and firms led by women, some of the gaps in financial literacy are even larger. So I think that from that perspective, there's a piece that we've not been addressing, which I think is important to flag, which is very important in terms of access to funding and financing and other products for SMEs, and in particular, gaps in literacy, in particular in some of these firms led by women. So I think that's another piece which we could, maybe for next year's Chile Day, but I just didn't want to pass because I think it's incredibly relevant. Thanks.
Well, thank you very much. I think that we have time just for one final question. If you can tell me, Isabel. Okay.
I'm ready, and it's really funny because your shamelessly off-topic topic ties perfectly into my question. It was originally for Camila, actually, but please all feel free to weigh in. I was going to address the topic that female founders still continuously have very little access to capital, very little access to investment, and maybe, Camila, you can provide some sort of your views and also maybe some advice to female founders looking for venture capital.
Well, tough question. Well, that's a very good question. I think one of the things that have all this, what the regulators are doing, we are doing, and ESG is helping, it's propelling women in this types of roles. So, for example, I think that sometimes the quota or these types of things, even though in the long term I don't really like, in the short term do push to what you're asking. And then there are a lot of funds, and if you're a founder, and I totally encourage to do that, there are so many funds that they're just, especially even in the US and Europe and even in Chile, that are allocated to women's founders, just to that type of because there are many, as empirical data has shown, there are more, they push more to long term. So actually there's a lower dropout in terms of VCs that are led by women than led by men. So even there's a financial argument to that. So I would definitely push towards trying to of course, you need to look everywhere when you're searching for capital, especially in this world. But there are rooms specially dedicated to these types of funds and to these types of companies, and even though of course that's not what we want in the long term, this in the short term actually does give you some space, try to normalize this gap that we're seeing also in founders on VC, on small and mid-cap companies, and all this universe that you're pushing towards. So I would say definitely try to attain that world as well. And there is many funds that are trying to do this, and they're increasing like very fast.
Ladislao, I think we have run out of time, so I really want to thank Kevin, Rosario, Camila, and Ladislao for this very interesting discussion, and I want to thank all of you for joining us today. Thank you. And now we can go into a lunch break and a networking there at the